Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about another penny stock, and that stock is HITI, ticker HITI. Now I'm not the first person to be talking about this stock by any means, however there are a couple of really important things we're going to discuss in this video that I haven't seen anyone else talking about on YouTube, but are really important that as investors we are aware of and understand. If you're interested in this stock, then this is definitely one you don't want to miss. Now, it is a slightly longer video than normal, however, stick with me. I guarantee it'll be worth your time. In this video, we're going to cover absolutely everything which we as investors need to know about this company, the positives and the negatives. And as part of this, I will also share my own position. Now, personally, I do believe there are a number of things we can be very excited about with this stock. However, there are one or two things which we definitely need to be aware of and understand what the potential mitigants against those risks are. As part of this video, I've also done a quick valuation analysis to give an indication of what the potential price targets could be, and so we will run through that part as well. If you're new to the channel and you like investing related content, then hit that subscribe button. The YouTube algorithm doesn't like my unpredictable upload schedule, so as a result, oftentimes my videos aren't showing up on people's homepages. If you want to make sure you don't miss an upload, hit that bell button, and then hopefully, in that case, your videos will be showing up on your homepage. If you like the video, please smash the like button. It's so helpful in pushing the channel to a wider audience. And also something new to this channel. If you're interested in what I would say is a very different kind of Patreon page for investing, then check out the link in the description below and check out that video. Now, if it's not in the description below, then it will be by the 10th of February. It's just because I haven't got round to editing and uploading it yet. That video covers exactly why this Patreon page is so different, what it entails, what it involves, and why you might be interested in it. As always, whilst my full-time office-based job is investing, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So, what do? HITI is a Canada-based cannabis retail business. They operate under a number of different brands and have three core divisions to the business. Brick and mortar retail, which is the largest component of the business, where they operate under brands such as Canna Cabana, New Leaf, Meta Cannabis and Kush Club. Currently, across this portfolio of brands, they have just under 70 sites. However, they currently plan for that to be around 115 stores by the end of this financial year. The second division is the online retail side of the business. Now here they predominantly operate under two brands, grasscity.com and cbdcity.com. Both of these sites are very well known and attract millions of unique viewers every month. What's also important to note here is that Grass City has customers in markets where currently cannabis is not legalised and is not regulated. Now that's a really interesting point, and we'll come on to discuss why that's so important later in the video. Now the final division is the wholesale division, and this is where they focus on the manufacture and wholesale of cannabis related paraphernalia. This part of the business has a large physical presence in the US and in Canada. Now this part of the business also has a number of brand deals with certain celebrities, Snoop Dogg, Paramount Pictures, Trailer Park Boys. Those are just a few amongst a larger list. Now we will discuss this part in more detail later in the video, however I have seen a number of people get very excited about this point. However, on the basis of some simple financials and economics around this point, I'm not sure I share this same enthusiasm. HITI also has a very strong management team, a decorated CEO, CFO, CRO, and then a very strong executive board. What's also important to note is that some of the management team do hold very big equity investments in the company currently. For example, the CEO, Raj Grover, owns around 21% of the business still. Now personally, I do really like to see that in the companies I invest into. It ensures alignments of incentives between investors and the management team. Now at the time of filming, and hopefully I get this up quickly, it has a market cap of around $280 million. The stock price has performed very well over the past 10 days, and personally I do believe there is still a significant amount of upside here. Later in the video we'll go into the detail of my analysis. I'll share that with you, explaining where the upside is I see and how mathematically that makes sense. Now the company is also going through the process of potentially uplisting to the Nasdaq. This is something that's still in process, and there are a number of corporate actions that have to take place between now and then. However, it certainly could be something that's driving some of the excitement around this stock currently. Again, we'll touch on that in more detail later in the video. So, what are the positives? Well, the first positive I see here is the market growth. Now, whichever way you look at it, whichever metrics or whichever measures you look at, the cannabis market is rapidly growing. HITI itself has demonstrated strong historical growth, both organically, through opening up new physical sites, increasing its online footprint, and also inorganically through M&A, acquiring other businesses. The growth in existing markets is forecast to be very strong. The North American cannabis market, and that's the US and Canada included within that figure, is expected to grow at a compound annual growth rate of around 30% to 2027. Now that's massive growth, and that's really exciting to see. It presents HITI with a massive number of opportunities. What's also important to note here is that investment analysts are predicting that the company itself will grow faster than this rate, implying it capturing market share. Again, that's great to see, but we'll come on to that in much more detail later in the video. So whilst growth in existing markets is forecast to be high, there's also the really exciting potential and opportunity for new markets to be opening up, which add incremental growth on top of that. There's a lot of debate currently around the US federal legalization of cannabis point, and the US is not alone in considering this. Personally, I do think we're going to see a wave of increasing focus and increasing government attention on the legalization of cannabis. Taking a step back for a moment, a number of governments are in difficult financial positions. They have a lot of debt, which they've had to take on as a support measure for businesses as a result of the health crisis. Now, this has to be repaid somehow, and increasing tax rates is a particularly unpopular way of doing so. Especially in countries where there's an upcoming election, this is definitely something on the political agenda that needs to be handled carefully. However, by regulating and legalising cannabis and taxing it, it's a very attractive way of generating new streams of tax revenue for the government without making the unpopular decision of having to increase the rates of tax on existing taxes. So personally, I do believe that will be a driver of us seeing new countries over the coming years legalising and regulating cannabis. Now, what's important to note here as well is that Grass City, for example, has a foothold in many markets where cannabis currently isn't legal. The UK, for example, 10% of GrassCity.com sales come from the UK. If the UK was to legalise cannabis, that would enable HITI to leverage the strength of the brand of Grass City in the UK and very quickly establish a presence. Now, the next positive I see about this business is a result of the regulation. Now, personally, I always like investing into businesses where there is a degree of regulatory overhang that provides a catalyst and provides positives for the business. When looking at HITI, I like the way the regulatory overhang benefits the business. In this case, it provides a strong barrier to entry. The necessity for licensing, the high costs associated with the regulation, means that it makes it harder for new companies to enter the market. Now, it's important to note this is only relevant to areas where it's dealing with actual cannabis sales. However, this is the largest part of HITI's business. Normally, I'm not a fan of investing into retail. Usually, there's no barriers to entry, there's very little differentiation, and it's highly competitive. That means margins are continually under pressure. That's not the case with HITI, and that's not the case with the cannabis sector at all. Now, this regulatory overhang also provides another benefit to HITI, and that is the benefit of being scaled and being large. As the largest player in the market, this really benefits HITI. It has deeper pockets to support the regulation and compliance with the regulation. It has more expertise, it's done it more times, it knows how to get these licenses and knows what they need to do to maintain them. And ultimately, with a larger business, when you have those high costs of regulation, you get greater economies of scale the larger you are. Now, personally, when I look at the cannabis retail market and the regulatory dynamics currently at play, I do think there are some parallels which can be drawn to the physical casino gaming market. Those dynamics at play mean that you don't see new casinos opening up at the same rate as you see new clothing stores opening up or new restaurant stores opening up. Again, for me, this is a big positive here. Now, the next positive I see, and that I like, is around the demand. What I like about the demand for HITI is that given the vice-like nature of the product of cannabis, that drives a lesser degree of correlation to disposable incomes. In more simple terms, the demand for cannabis does not decrease as people's disposable incomes decrease. Now, that's definitely not the case which can be said for many other retail businesses. Personally, I think given where we are in the economic cycle, this is a particularly important consideration. If you've seen any of my other videos on this channel, you'll know personally how important resilience in the businesses I invest into is for me. Across market cycles, the most resilient businesses are those which generate the greatest returns. And as such, the resilience which this vice-like nature of the product gives to HITI gets a tick from me. Given the nascency of the legal cannabis market during previous recessions, it's hard to use that as a data point. However, using alcohol as a proxy or gambling as a proxy, you can see that during previous recessions, the demand did not decrease. I do believe we'll have the same trend with cannabis, and ultimately what that means is that there should be limited impact on the revenue line for HITI. Now, the next positive I like about HITI is how the business has performed during this recent health crisis. Clearly, the business is very heavily weighted towards brick and mortar retail. However, it has performed really well. It has managed to capture that shift to online, and it is really positive to see that the business hasn't been massively detrimentally impacted during this period. Now, it is important to note here that it has received some government financial support in the form of the job retention scheme programs, but we'll come back to that one later in the video. Personally, this positive performance during this period gives me confidence in management's capability and shows that strategically they're able to navigate challenging situations. Again, that's a real positive for me. Now, the next thing I really like about HITI is the access it has to data. Now, if you haven't seen my previous video on Akerna, ticker KERN, then I recommend checking that out. In that video, I did touch on why I find data around the cannabis sector so exciting. However, HITI is also positioned to capitalise on this potential opportunity. Given their unique access to data, customer trends, dynamics, there's a real opportunity to establish itself as the leading price reporting agency for the cannabis sector. Being the leading price reporting agency in itself for any sector is a billion-dollar idea. And given the unique access that HITI has, I do believe here it's a real opportunity. Now the current play on this is KERN Analytics, which I like, it's great, but it's still very, very small. If management can massively scale this, establish it as a leading PRA, that would be a very, very exciting proposition. All you have to do is look at PRAs in other sectors, PRAs to the alcohol sector, PRAs to the food sector, PRAs to the lithium sector. PRAs to any area of a supply chain where there is a commodity price involved is a massive, massive opportunity. What also excites me about such opportunities is the fact that those businesses are underpinned by very resilient revenues. They're subscription based, they're very, very recurring. So again, I would love to see management harness this strategy a bit and look to really grow the value of the business that way. Now the next positive I think is really important to discuss here is the forecast financials and the current analyst coverage the business has. Now as you can see from this screenshot, HITI currently is covered by 2 analysts. Both of those have buy ratings on the stock, and whilst they're not huge investment banks, both ATB and Akerna are respected analysts. Now currently, both analysts have a price target on the stock of 60 cents. Now it's important to note at this point in time that those analyst reports are somewhat outdated. When those 60-cent target prices were set, HITI was actually itself trading at 15 cents. So ultimately the brokers were forecasting a 4x uplift on that current share price. Personally, I do think we're going to see revisions from both of these brokers soon. As and when those are updated, of course I'll let you know. Make sure you're subscribed to the channel so you don't miss that. Now the other real positive I see here is the forecast growth which the analysts are forecasting. In their latest forecast models, they're assuming a revenue growth of around 77% CAGR. As you can see, by 2022, they're forecasting that the business will be generating sales of around $250 million and EBITDA of around $46 million. Now, a quick reminder here is that this is the forecast from financial analysts. They've built a model that underpins these analyses. I do see a number of forecasts put forward on YouTube which aren't underpinned by the same level of analysis. So this comes out of a financial model, and they will have spoken and worked with management to make sure that the assumptions in their model are fair and true. Now, as part of this channel, I would love to share videos on how those models are made. So if that is something you're interested in, please let me know in the comment section below. Now ultimately, that's a great level of growth. It's always good to see that. And it's particularly important when considering the valuation versus the peers. And that leads us quite nicely onto the next positive, which personally I see is the valuation. Now personally, I have seen a load of videos on YouTube all saying this stock could do 100x. And oftentimes those videos are underpinned by no analysis whatsoever and is just the video creator's gut feeling. Now personally, I'm not a fan of those videos. I ultimately think it gives investing YouTube a bad name. And whenever people put forward price targets, no matter how outlandish, I do like to see some analysis underpinning those. So now, in this part of the video, we're going to look into my analysis and I'll walk you through how I've got to my potential price targets here. So now I'm going to run you through my analysis that underpins why I fundamentally believe that at this point in time, HITI is undervalued. So the way I've looked at this is by looking at the EV sales multiple on a forward year basis versus the key peers. I'm not looking at it on an EBITDA basis because there are a number of businesses which aren't yet EBITDA profitable. So to keep it as meaningful as possible, with as many data points as possible, we're looking at it on a sales multiple basis. As you can see here, I've listed out the multiples which a number of the key cannabis sector players are trading at. Now personally, I believe that Planet 13 is the most direct comparable. They're more focused on retail, they have a more comparable business model to HITI than some of the other players which are more focused around manufacturing. At this point in time, Planet 13 is trading at just under 16 times its forecast sales. When you look at the average of the whole peer group itself, that's trading at an average of 25 times the forward sales. So now, taking these multiples, assuming that HITI should be trading in line with the peers in its sector, we can then calculate what that means for a valuation for HITI and ultimately a stock price. Now, before we go into this in more detail and before people come at me in the comments, I have 4 main assumptions I just want to outline here. The first one of these is that the net debt will change over the coming year. This is a result of the capital structure, the financing it has in place with convertibles, the warrants it has in place, and many other instruments like that. Given the relatively small impact this has on the net debt figure, I haven't tried to overcomplicate the analysis and have kept it simple and ignored it from this analysis. Now the second one of these is that the share count will obviously change as well. To not overcomplicate this, and for the purposes of this analysis, I've used the current share count. However, dilution from the warrants, from the options, from the convertibles will all change that share count over the coming year. Again, it shouldn't have a massive impact on the stock price calculation. However, if you are fundamentally worried by that, Just look at the impact on the market cap or even the enterprise value and see the delta in valuation between where it currently is now and what, if it was to be trading in line with its peers, it would be trading at. The third one is that this is not accounting for any more M&A or any other stock splits or any other corporate actions the company may undergo. And now the fourth one of these is that the forecast financials, which I'm using for the purposes of this analysis, are the current mean of the analyst estimates. This comes from Reuters and it is slightly different from the figure currently in Seeking Alpha. All of that being said, there's a massive potential uplift in the valuation for High Tide if it was to be trading in line with its peers. If its valuation multiple was to match that of Planet 13's, its share price should be around $6. Obviously that's a huge 10x uplift from where it currently is now. As I've mentioned before, I do believe Planet 13 is the most direct comparable, and so this is probably the fairest range for valuation. However, if you look at the average of the overall peer group, that implies a stock price of just under $10. So again, massive uplift from where it currently is trading. Now, that being said, this is obviously not something that's going to happen overnight, and I do believe there are reasons why it should be trading at a discount to Planet 13, just not the magnitude of discount it's currently trading at. It's a smaller business, it's trading on a different stock market where different investors want to be investing and can invest on that market. It has a more complex capital structure and financing structure, and ultimately all of these play into why it should be trading at a slight discount to Planet 13, just not the magnitude of the discount it currently is trading at. Now, one thing we should also address here is around the NASDAQ listing. Now, I'm not going to go into this in too much detail. If you're interested, I can do a separate video on this. However, currently the business is looking at meeting some of the criteria which are required to uplist on the NASDAQ. As part of this, there are some corporate actions and some corporate hoops which they need to jump through. Now, there definitely is an argument that this could help drive up the valuation. It would enable investors who currently wouldn't invest on the market that it currently is listed on to invest into High Tide. And so this in itself would attract a whole range of new investors. However, personally, I'm a little bit concerned about this. However, personally, whilst I believe this could have some positive impact, I think we should take it with a pinch of salt. We do need to be careful that the stock price isn't rallying over the hype and expectation that this is going to happen. And so that's something that people should definitely keep in mind when they're considering whether to make an investment here. So, what are the key risks I see? Well, firstly, I think the main risk that every business in this sector faces is the risk to changing regulation. Now, obviously a change to the regulation would have an impact on High Tide. However, the majority of the business is based in Canada. The regulation in Canada isn't going anywhere on the basis of what I currently understand, and so we can be pretty confident that that market is here to stay. As we discussed earlier, I do personally believe that we are going to see a wave of new countries regulating and legalising cannabis. And so ultimately I do see that as a strong offsetting factor. However, there's no getting away from the fact that if the rhetoric was to change from federal legalisation in the US, it would have an impact on the stock price as people become less excited about the growth prospects, however wrong that may be taking that view. Now, the second risk that's very important to address is that around dilution. Now, there's no escaping that there is going to be some significant dilution here. Just look at this table, for example, for all the dilutive instruments that are currently in the capital structure. We're going to see dilution from warrants, from convertibles, from stock options, but we know that. I also wouldn't be surprised if the company did some more equity issuances to raise more capital to support growth, and again, that would lead to more dilution. However, personally, I'm not again unduly concerned by this. I fundamentally believe the business is undervalued, and I do believe that the dilution is priced into the stock price. Now, the third risk I think we need to address is that around potentially misleading cost bases. Now, hear me out on this one. Personally, I have this concern when I'm looking at a business like this, which doesn't have years and years of trading history. As we mentioned before, the business has benefited from government assistance around job retention schemes. And so, whilst not a risk exclusively to High Tide, there is the risk that once this aid goes, once this financial assistance is withdrawn, the company has a bloated cost base and costs have been mismanaged. Now, I definitely don't think this is something exclusive to High Tide. I think it's a trend we're going to see across a number of companies as this financial assistance is withdrawn. And particularly under High Tide's circumstances, I think perhaps this risk is mitigated by the fact they have gone through a number of acquisitions recently. As part of this, management has had to do detailed cost reviews. That's how they've come up with this figure of the 8.4 million synergies which they believe they can recognise. And again, that in itself is a risk that that's not delivered. However, there has been a real exercise in going in to understand what that figure could be. So personally, because of that, I think that this risk is less likely. However, as investors, it's something we should definitely keep an eye on. Now, the final risk and final thing that I think we need to keep an eye on as investors is around the marketing expenses. Now, I have seen a load of people on YouTube get excited about these celebrity endorsements and celebrity partnerships, which High Tide has. Personally, I'm a bit more sceptical around this. Is there really more demand for Snoop Dogg branded grinders, Guns N' Roses branded papers, or Cheech and Chong branded bongs? Whatever they are, is there more demand for that? I think we need to take a step back and think about whether it makes sense economically. What is the ROI on that investment? Now, the management discussion and analysis reports have indicated that these have been helpful in winning new customers. However, this is something I'd like to dig into more. These partnerships are an increased cost. We don't know the structure of the licenses, but I'm sure there's an upfront component. It's not all on the basis of volume. And so does that drive a compelling ROI? That's something I'd love to see more data on and love to get to the bottom of. Of course, if this is the case and there is a strong ROI from this, then I'll hold my hands up, agree the risk is unwarranted, but personally I would like to see that detail and I would love to do that analysis. So, what am I doing? Well, I have taken a position in this stock. I'm excited to see the growth plan play out, increasing its footprint both online and on the brick and mortar side. And fundamentally, I do believe the business is undervalued versus its peers. I like the high growth market, I like management, and I believe they are well placed to deliver this strategy. And so personally, I am excited about this one. However, it is important to note that given its size, given the market it operates in, and given the size of the float, that this one is more volatile, is more risky than investing in some of your blue chip stocks like Microsoft, for example. So that's always important to bear in mind before making an investment. Thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investing related content, then hit that subscribe button. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's thoughts, perspectives, opinions, so please get involved. Thank you so much for watching, and I'll see you in another video.